Hello, everyone. Thanks for joining us today, and welcome to this educational presentation, where today I want to talk to you about bullish breakout trading. Now, breakout trading is a specific type of applying a certain method to the market, and it actually works pretty well, but some methods are better than others. Now, today I want to share with you a breakout technique that really has shown some really high consistent examples in the current market conditions. But let me first show you why most people and most traders really don't succeed a lot with breakout trading. And here's one of the main reasons. As we look at this older chart in UNH, okay, as we see, first of all, the market is heading down, but you like this stock. Let's say you've done the research, or that guy in that chat room says, you got to buy this on the breakout. And so you figure this is the breakout area. If it breaks out above this last short-term high, I'm going to be buying. So you just kind of wait, and then it goes a little bit lower. And so you lower your breakout level down to this area, okay? So you say to yourself, okay, well, if it goes back up, I'll buy it again. But that's a long distance from where it is right now. Now, lo and behold, it does go up, and it does break out and go up much higher. So you were right in your analysis. The only problem is, if you use these breakout areas as your entry point, you'd be buying roughly around this area, which is towards the high of the nice rally. Well, with the technique I'm going to be teaching you today, you actually would have bought way down here on this bar, and you could have potentially captured 60 points. So this is what we're going to be talking about today, bullish breakout trading with a really nice technique that has shown some really great consistency in the last month or so. And once again, this is an educational presentation where we're going to be sharing with you things that I've accumulated in my 46 years of trading. So welcome. My name is Steven Primo, president and founder of Specialist Trading. If you're new to my presentations, we're all about educating you. When I first started trading on the floor of the Pacific Stock Exchange, I used this technique for breakouts, and it worked really well, but you need specific requirements in order to apply this method, and that's what I'm going to be sharing with you today. Now, before we begin, please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this breakout technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember, since we are an educational company, all examples are strictly for educational purposes only. Now, another way to get education on a daily basis is to follow us on Twitter. I see some new names here. If you haven't done so already, I post different information on a daily basis, up to about 5 or 6 different postings. Some of the postings are displays of current signals our strategies have generated. Other postings are little bits of financial wisdom. But either way, there's lots of great free education on a daily basis. Please feel free to follow us on Twitter. Okay, as an educator, remember, once again, we are different from other webinars you may have attended, in that our only goal is simply to educate you. You see, a good mentor does not trade for you. He teaches you how to trade. So that's my goal, not to force feed you signals, not to tell you what I think the market's going to do, or the perfect time frame, or the perfect stock to buy, but to teach you how to trade. Because once you learn how to trade and take responsibility, then, in my opinion, you'll become a consistent trader by making your own trading decisions. And this is our goal, to make you all consistent traders, simply because you've taken the first step of taking responsibility and being in charge of your own trading destiny. Okay, so let's begin today's educational presentation. And we're going to be talking about this breakout technique that involves our dynamic stop levels. This is a great, relatively new feature we have. And it's, in my opinion, probably one of the most overlooked features and underrated, because it really has a lot of potential in helping you to become a consistent trader. All right, so let's define what the PTS dynamic stops are. The dynamic stop is a proprietary stop placement formula that moves with the ebb and flow of price, and is specifically designed to track the behavior of the market you are currently trading. So it's tracking market behavior. It's not based on any news. It's not based on chart patterns like pivot points or reversals. It's simply tracking the ebb and flow of market behavior. Now, dynamic stops, one of the great advantages of it is that they can keep you in a winning trade for as long as possible. So if you're using them as a regular stop placement, let me share with you an example of how well they can work. Now, here's an older example of Oracle weekly chart. Now, this is one of our strategies buy signals right here, okay? Here's what you could do. Once you have a buy entry, what you would do on our platform is click on dynamic stops. And since you're long, you'd want to click on the sells because this is where you're going to be getting out if you're stopped out. And you see they automatically appear. Now you can choose either one you'd want as your stop level, but this is where you're going to be getting out if you're wrong. So you're already in the trade, right? You bought on this bar. And you click on, as we said, stop levels, and here they go up again. Now, as the trade progresses, you see after the first 3 or 4 days, you have a nice profit, but now it starts to roll over. And this is where the doubt comes in. This is where traders say, wow, I'm giving away a majority of my profit, and that guy in the trading room says it's going to go much lower and I should short it, and he doesn't like the stock, and they don't like the stock on TV, so I should just sell. This is why a lot of traders fail with breakout methods, because you don't know where to get out and don't know how to hold on to a method. This is the beauty of the dynamic stops, because once again, they're based on market behavior. If you had applied the dynamic stops, they automatically are displayed on our platform, the PTS Primo charting platform, and you would have seen one would have been generated right here at the close of this bar. So you could have said, well, listen, if it's going to go down, at least I'll get stopped out right here. And look what happened. Well, it didn't go down. It actually kind of stayed where it was. It didn't really scream to the upside, but it just kind of stayed at the same level. But you're still in the trade. And at the close of this bar, a dynamic stop level was generated right below that. So you say, okay, well, if I'm going to be stopped out, I'll be stopped out a little bit higher. And this will, I'll be able to lock in some profits at least. But look what happened after that. Isn't it amazing how it knew right at that level, based on market behavior, to hold on? And so you held on, you're still in the trade. Now it's making higher highs, and you have a better profit than you did when that guy in the chat room said to sell, because it had been going down 4 days in a row. And as the trade progresses, the dynamic stops are automatically generated on the platform. So now you're locking in more and more profits, and you're just holding on. And now look what happens. The stock takes off, and as it goes up, you're locking in profit. So this is a great advantage of the dynamic stop levels. They can keep you into a winning trade for as long as possible. Okay, now this can also be taking place on the downside. Here's a sell signal that was generated in the British pound, or I should say British pound Canadian dollar. Okay, as we see here, if you clicked on dynamic stops, you could have said, okay, well, there's my stop level right here. So if you wanted to sell, you would have known that your stop level was right here, so you would have been risking this much. If that meets your standards, your criteria, okay, then it's okay to take the trade. And as we see, you're in the trade and more stops are being generated. So now if you sold somewhere around here, you have a very small risk. And as it goes more in your favor, you're feeling more and more comfortable about the trade. And now you're basically breaking even. So you're playing with house money. There's nothing to worry about, because if it does go up, you'll get stopped out roughly with a small loss or a small profit, depending on where you got in. But look at how the trade unfolds. It's really going in your direction now. You're doing very well. And as the trade unfolds, you'll see that the levels are unfolding as well. So now you sold somewhere around here, and here's your stop level. So if you're going to be stopped out, you're going to be able to lock in some profit, but look what happens. You weren't stopped out. So this is the beauty of using the stop levels to help you as a protective stop. If you're going to be in one of these great trades where they just keep going and going, these dynamic stop levels can really help you lock in a profit, okay? But there also is another advantage to trading with the new dynamic stop levels. And this is what we're going to be talking about today, because the other advantage is breakout trading. All right. You can use these as a tool to break out. So I'm going to share with you a great technique. Once again, I've used this before and it works very, very well, but you need to have certain market setups and conditions for this to happen. And currently we're having them, and a lot of them we've just begun. So that's why I wanted to give this presentation to share with you how well you can have this extra tool in your trading kit to help you with these environments, okay? So let's go through the process of what I'm talking about. All right, here's an older chart of Apple, okay? Here's the first thing you want to look for. We're talking about bullish breakouts, or we're talking about breakouts to the upside. So the first thing you want to find in anything you're looking for is a steep downward slope. Okay, that's the thing you want to be looking at, regardless of what market, regardless of what time frame. You want to see a steep downward slope, such as we're viewing right now. Okay, now once you see that, you apply the 20-period simple moving average. Now, I know a lot of you would say, well, can I apply a 10-period? Can I apply an exponential? Can I apply this or that? Sure, feel free to experiment. In fact, we encourage that. Because remember, you're in charge of your own trading destiny. What I said at the very beginning of the presentation, my goal is to teach you, but it's up to you to decide how you want to apply and trade. So apply a 20-period moving average, experiment with it, experiment with anything else, but it's been my experience that this works better than any other time period, okay? All right, so you have the 20-period moving average on the steep sloping market. Now we want to click on the PTS Dynamic Stop tab on our platform, okay? And once you do that, you'll see this drop-down menu, click on Buy Stop, because we're going to be looking to buy. And as you can see, they automatically appear right here. They're automatically displayed. All right. We only want to be concerned with trading dynamic stops below the 20-period simple moving average. So we're not going to be concerned with these ones up here. Okay. We're just concerned with this. And so what does that mean? That means if price starts to go up, it will break out by touching this right here, this level. And all the prices are right there for you. So you know exactly what that price is. So you would simply place a alert there, or you would place a buy stop there, or you would just simply watch it in front of your computer. And when it touches that level, that's your signal to buy. That's how simple this is. So as we see, it touched there, you would have bought. Now look what happened at the end of that day. It went lower, but that's okay. And look at, there was, on the next day, there was another one. So if you want to, because many times there's more than one stop below the 20-period moving average, you have multiple chances to get in. A lot of students like to buy as many as possible because they know they're buying at lower levels. Let's say you would purchase two of these levels once they traded at both of them, all right? Now, where do you protect yourself? Well, look at where the last low was, the last current low. What you want to do is place a protective stop below the nearest short-term low, which would be right here, okay? So you've entered around here, and if you're stopped out if it's wrong, you have a stop right here, okay? So now the only thing left to do is to wait. And look what happened. The stock gapped up or shot up 18 points, okay? Not a bad little breakout, right? Now, most traders wouldn't have seen this until roughly somewhere around here, like, oh, this is really taken off. We've broke out of this high. It's time to get in. But do you see how the dynamic stop levels are designed to get you in at a much lower level? And there's nothing you really have to do other than look for a steep downtrend in whatever market or time frame you're trading, apply a 20-period moving average and the dynamic stop levels. And you're only going to be interested in buying the dynamic stop levels that are below the 20-period moving average. Once they touch there, once price touches there, that's your signal to get in. So that's the simple process. Let's look at some recent examples. As I said, this is happening a lot. I've noticed this a lot within the last couple of weeks to a month. And so this, if we do have some type of situation where this environment keeps repeating, this is a great tool to have for your trading. All right, let's look at Peloton, PTON, all right? Coming into January, last month, obviously, we had a very steep downward trend. This is prime example of what you're looking for. You want to find, you don't want to stay away from these ones. What you do is you want to find these steep downtrends, okay? But the next step is to apply the 20-period simple moving average. You see right here, this is the 20-period simple moving average. Once you've applied that, then the next step is to click on dynamic stops. In the drop-down menu, click on buy stops, because remember, we're bullish. We're going to be buying at lower levels. And you'll see that dynamic stops automatically appear. Now, we're not going to be concerned with the ones that are above the 20-period moving average. We're only concerned with the ones below, and we only have one below. So when price traded there, that was your signal to enter, okay? So you would have entered roughly about 8.31. This is a very inexpensive stock at 8.31. And as price started to move, well, before price started to move, that's where you'd place your stop right here, okay? Now we see price start to go up, and you have a second chance. Remember, this is your option. You can buy another lot if you like, or just say, no, I'm going to stick with the first one and I'll just wait. It's entirely up to you. You are in charge. You should be making your own trading decisions. So you had a choice to buy it again, and then look what happened. Coming into this month, in the first week of February, stock was up 9 points. Remember, you purchased the first shares at 8.31, so you've already made, if you held on this time, you have potentially made 100% in just about 3 weeks. That's not a bad little trade, right? None of this is based off any fundamental news, so you don't have to worry about overcomplicating your trading, trying to figure out, well, gosh, is the market fundamentally sound? Is this stock fundamentally sound? Should I look at the earnings estimates? Or what about support and resistance? There's no need to overcomplicate your trading. All you have to do is follow these steps. Let's look at another example to show you. AI, okay? And not a real strictly steep downward trend, but it's still steep enough for us, okay? It's going lower. So we apply the 20-period moving average. And we see here that price dropped below the 20-period right here. Now we apply the dynamic stop levels. Clicking on our platform, it's one click away, click on buy, and you see them appear. You see a couple of them above the 20-period, but we have two below at roughly 11.42. Right here, it traded above, so we would have bought at 11.42, okay? After you purchase, we look for the nearest short-term low, which is right here. We place our stop, and 19 points coming into the first week of February. Not a bad little trade, right? Let's look at Disney, okay? Here's the daily chart of Disney. We have the 20-period simple moving average applied to a pretty steep downward trend. We applied the dynamic stops. We're not concerned with these that are above. We're only concerned with these two below at roughly 88.07. Price traded there on this bar, so we would have bought. We place our stop just below this lowest low, and then trading is simple. We wait, okay? That's all you got to do. 25 points. Let's look at Apple. Now, this is a current example on Apple in January. Obviously, it's been going down rather strongly to the downside. We're below the 20-period moving average. We apply the dynamic stop levels. We see we have a number of them right here. Right here at 28.66, we crossed above, so we could have bought right here. Now, if we wanted to take advantage of this one, we also could have. It's up to you once again. So we had two chances to buy. So roughly we're long, I'd say about 129 if we bought both, okay? We see what the last current low was right here. We place our stop, and then we just wait. 30 points, and we bought it roughly on balance at 129. It went up roughly to 158, 159, just about 30 points. Not a bad little trade, right? Here's an example in Amazon. Now, remember at the very beginning of this presentation, I said this is an extremely consistent technique. Now, by consistent, we mean that we know there is an awareness of losses. We will have losses from time to time. But as I always say in all of my webinars, consistency does not mean that you have a ton of wins and very small losses. No, it means that your trading technique or plan is able oftentimes to recoup that loss on the very next setup. So that's what you want, a 2 steps forward, 1 step back approach. For example, right here, we have kind of a steep downward move. We're below the 20. And we see here that there's some buy stops generated by using our dynamic stop levels. And right here, we could have gone long. Now, actually, you could have placed a limit because it would have opened here. But if you had a limit, it came down and touched. So now you're long, roughly at this level. We look at the last short-term low, which is right here. So we're long here. We have a short-term stop placement right here. So let's just wait and see what happens. Well, in the next week, we got stopped out with a 5-point loss, okay? So did not work out very well. That's okay, because look what happened is long as we continue to track, we continue to have stop placements as the price goes lower. So we can get back on again at a lower level, right here at 84.5. Place the stop just below the low, and look what happened after that, okay? 30 points to the upside. This is what we mean by consistency. Now let's look at a very good example in Tesla. It doesn't get any more steeper than this. Look at how steep this downward move is, right? So let's go through the process. The first thing you do is you apply the 20-period simple moving average. And we see that we're well below the 20-period moving average, okay? Next, we click on PTS dynamic stops. Click on buy stops. And as we can see, we have numerous ones below the 20-period moving average. Here's one at 114.59. And as we can see, it gapped up above there. We have another one. So we had two chances to get in, roughly right here and right here, okay? I realize this is an expensive stock, so most likely you probably just would have wanted to buy one lot. And remember, you can buy calls, you can buy option spreads. It's up to you. We're not an option class, and we're not actually even a signal class in terms of telling you how many shares or what to buy. That's up to you. Remember, you're in charge of your trading destiny. We're just teaching you high probability points of entry. How you decide to enter, whether through the actual stock, the currency pair, the future, or options is entirely up to you. But this would have been the area to buy right here, okay? We're below the 20. Here's where the dynamic stops have been touched. And then we place our stop just below 100 points coming into last week, okay? This is how simple this process is. Had nothing to do, once again, with news. Has nothing to do. We don't even look at news. I stopped looking at news 46 years ago. So trust me, this is not based on news. Had nothing to do with support and resistance. Had nothing to do with watching the institutions. Don't care about what they do. Had nothing to do with earnings. It was just based on market behavior, the simplest way to trade and the most consistent, in my opinion, as well. Okay, let's review really quickly. Dynamic stops. These are stop levels that are specifically based upon market behavior. They're not based upon pivot lows or pivot highs. They're not based upon higher highs and higher lows. None of that. They're not based upon volume. They're just based upon market behavior. It's a proprietary technique, but that's okay. All you need to know is how to apply them. And remember, one of the best advantages is if you already have a method that you feel confident with, and students say, well, Steve, you know, I really don't like to trade breakouts. I kind of have my own system and it works well for me. That's great. But if you like to stay in trades as long as possible, the dynamic stop levels can really help you. Remember, based off this buy right here, you would have still been in this trade the entire time if you elected to do so based on the stops. But if you were, once again, worried about this 4 days of downward or 4 weeks of downward motion and scared that you were giving away all your profit, you would have exited with a small little gain and given all this away and left it all on the table. So that's what they can really be helpful for. But the other advantage, which we talked about today, is trading with the dynamic stop levels as a breakout tool. They really help. A lot of our students who took our course said that, boy, you know, I was originally going to just use this as a stop placement, but I've done tremendously using this as a trading tool for breakouts. So it really helps as long as you have the requirements in place. This is the perfect tool for breakout traders. All right, let me tell you about today's special attendee offer for taking the time out of today to watch this educational presentation. We're going to offer you our Dynamic Stop 2-part course, okay? This is a full double video course. Remember, the stops, I should say, are based on market behavior, not random chart patterns. And the best thing about the stops is that you can apply it to any strategy, any market, or a time frame. As I just said, if you happen to have a strategy or a method that you feel currently very well with and that you feel perfectly comfortable, that's okay. You can still use this as a stop placement to help you stay in trades a lot longer. And you can also use it as a trading technique as well. All right. Now, we're also going to include 3 proprietary trading techniques in the Dynamic Stop course. But there's a little caveat to that because these are advanced techniques that require the PET-D. So you must have the PET-D for these proprietary techniques, okay? They're more advanced and they include the PET-D. Now, the PET-D is a separate issue, which I'll talk about in just a few moments. We have a great special for that as well, okay? As I said, you can apply to your current strategy or build your own based off these as well. And remember, these stops are auto-generated. Now, they're auto-generated only on our platform. You won't find them anywhere else like on Metastock, Pro-Trader Strategies, Thinkorswim, NinjaTrader. You're only going to find them on the PTS Primo charting platform. So because of that, we're including a full year of the platform, absolutely free. This is included in your price with the great discount, okay? Now, with the PTS Primo chart, you can also scan. And remember, you can scan for other time frames. You can scan for other markets. Let me share with you an example of something that is entirely different market and entirely different time frame. Here's a weekly chart of Meta, okay? Now, let me share with you what you could have done looking at this on a weekly time frame going back to July of this past year. Let's say you were looking at this and you say, well, maybe there's some support here. The guy I follow in the chat room, he thinks this should be bought. There's good support. But then there's another guy that says, stay away from it. What is market behavior telling me? Okay, well, same process applies regardless if we're looking at a 5-minute chart, a daily chart, or a weekly chart. For example, first thing you do is apply the 20-period simple moving average. We have been going down for a while. All right, so that's fine. Now we click on the dynamic stops on our platform, and here they are auto-generated, okay? Now, if we would have purchased the first one, we could have gotten this one roughly about right here. All right. Now, look what happened after this. This is what we mean by consistency. You would have placed your stop right there. Had you invested in this, once again, you would have been stopped out with a 20-point loss. This is where students say, hey, Steve, I tried your dynamic stops. I was a member of the course and it didn't work for me. I want a money back guarantee, or give me something else. I don't like this. This is what we mean by consistent. Okay. Let's say you had 100 shares, you lost 20 points, $2,000. Well, look what happened. Because the price continued to go lower at a much steeper level, the buy stops are still being generated below the 20-period moving average. And in November, December of last year, just a couple of months ago, you could have repurchased Meta right here. And look what's happened coming into this month. It's up 80 points. So you could have made back potentially the 20 you made, and then another 60 potentially for profit. So this is what we mean by a consistent method. It's extremely consistent. And just because you may have a small loss here or there does not mean you're going to be able to recoup it. Now, I know a lot of you are saying, well, this is great, Steve, but what if can it work the other way? What if the market goes down? Sure, it can. The only reason we're not talking about that now is because there aren't a lot of instances, because remember, you need that market environment for a steep downslope. Well, that has been happening as of late with a lot of issues, a lot of stocks, a lot of markets. So this is perfect for that. But it can happen when you have a steep upslope, as we have here in LYFT lift, okay? If you see a stock like this, you could apply the same principles. Nothing has to change. For example, you want a steep uptrend if you're going to be applying it this way. You're going to be using the same rules. You're just going to be turning them upside down. All right, so we have a steep uptrend. The next thing we want to do is apply the 20-period moving average, as we see right here. Okay, here's the 20-period moving average. So price was below and now crosses above. So now that it's above, we click on dynamic stop. And in this instance, we're going to be clicking on sell stop, because remember, we're not looking to buy now. With a steep upslope, we're looking to sell. So here are the stop sells. We're not pretty concerned with displayed below the 20-period moving average. We're only concerned with the ones above. So these are above, and we're going to sell or exit once we hit that stop level. So now we're going pretty well. Things are moving nicely. And right here, this was just last week or a couple of days ago on the 8th or 9th. That was last Wednesday and Thursday, a week ago. We crossed below the 16.66 level. So once it traded there, if you were long, this was your clue to exit the stop. And if you were thinking about going short or maybe buying some puts, that was your clue right there. And look what happened 2 days after you would have entered. Now, obviously, news came out that caused lift to break down like that. Once again, since we do not follow news in any shape or form, how did we know? Because this is based on market behavior. And market behavior, in my experience, often tells you in advance what a stock wants to do. So you see the beauty of this. Now, we don't have a lot of instances where stocks are going straight up yet. Maybe in the future, if we have a nice strong rally, you will see a lot of examples like this. And then I will give a presentation where I'm telling you about extreme breakouts to the downside. But as for right now, we have very few examples of things like this, because the market is actually starting to go up with this specific environment. Okay, so this is a great offer. It's a great course, a 2-part video course, okay? Remember, based on market behavior only, not random chart patterns. You can apply any strategy. If you happen to have a strategy right now that you feel comfortable with, that's maybe someone else's strategy, maybe something you came up with, that's perfectly okay. The stop levels will really, in my opinion, help you even with your own trading. Now, we're going to also include 3 proprietary trading techniques, but these do require the PET-D. So you're going to need the PET-D in order to trade these more advanced techniques with the dynamic stop levels, okay? And all these stop levels are auto-generated only on our platform. As I said, you won't find them on Metastock, Thinkorswim, NinjaTrader, TradeStation. You have to be able to use them on the PTS Primo chart platform. So for that reason alone, we're giving you a full year free of the PTS Primo charts, okay? So let's break it down. Now, the regular price for this is close to $4,000. That's how valuable this is. But we're going to slash that and cut the price down to $29.95. You're going to save $1,000, and this also includes payment plans. So even if $29.95 is difficult for you to come up with, don't worry. You can put down a very small deposit and still be up and running as early as today. Now, here's the thing I was going to mention with the Pet D. If you don't have the Pet D, Pro Trader Strategies, who is in charge of all the discounts and all of the pricing, they're very flexible. They would be very willing to work with you and give you a discount on that as well. Now, if you already currently have the Pet D, well, that's great. You can apply this, and it's perfect. But if you do not have the Pet D, there are payment plans available for that as well. So for a very small price, you can not only be getting into this dynamic stop two-part course, you can also have the Pet D and just establish some type of payment plan. And you'll really get onto your road to having consistent trading with these breakouts, okay? Now, I know a lot of you are saying, well, this was pretty educational, and now I kind of have the concept down, but you know what? I don't really think I need this, because if I just apply certain, benchmarks that you were talking about, I think that's all I need, and I can still take advantage of this. For example, let's look at this older chart in Snap, okay? Someone could say, well, Steve, right here, I'm looking at this, and, I bought right here because it broke out, all right? And I'm using the same thing. Once I buy, I look at the last short-term low, and I place my stop. So I should be okay. I really don't need what you were talking about, okay? Well, this is why you need this course, because look what happened after that, okay? Once again, just like Lyft, right? And this is an older example. This is something that happened last year. So the point is, you need these dynamic stops to warn you. Even if you apply the 20-period moving average, you would have seen that you weren't purchasing below the 20-period moving average the way that's required in this technique. You're purchasing above, and there were no dynamic stop levels placed here, even when we applied them. So there was no reason to buy anything. The dynamic stops were not being generated. So you really need this if you want to use this concept. This is not something as easy where you can just go back and say, I can just reverse engineer it and just follow the same concepts. No, we've had a number of students try to do that who've become potential students later on, and they say, I tried to do this on my own and lost a lot of money. That's okay. It's a lot easier to take advantage of this great offer and trade it the correct way and be able to be a consistent trader than to try and figure it out on your own by just, picking and choosing what you think may work. So trust me, don't wait another year to become a consistent trader. Take charge of your trading. If you're frustrated, if you've been putting in a lot of hard work and especially a lot of hard-earned money and you're not seeing any results, I know what that's like. I did that for the first nearly 2 years of my trading when I started some 46 years ago, doing most likely the exact same things you're doing, following all the conventional wisdom that's supposed to work, right? Things like earnings reports, things like economic indicators, things like listening to the trading gurus. It didn't work. It wasn't until I started using these tools and techniques that I teach all of my students that my trading started to turn around. So don't wait another year, okay? You don't want to run out of money. You don't want to be frustrated anymore, and you don't want to lose your concentration. Take advantage of this great offer, okay? Here's how to take advantage of it by contacting Pro Trader Strategies. They're my sister site. They're in charge of all the pricing, all of the tech support, and all of the discounts. Remember, if you'd like to establish a payment plan where you don't have to pay the full price up front, you can just put down a small deposit, I would call them directly at area code 310-598-6677 right here, okay, at the very bottom. They have trading consultants working the phones right now. They would be more than happy to answer any question you have about pricing or payment plan. And they're very flexible. Also, there's no obligation. They can give you a quote over the phone. You can think about it. But just don't think about it too long, or else you might miss this great offer, okay? We'll go back to the normal price. Now, that link you see at the very bottom, we've just posted that link in the webinar chat. So if you click on that little tab there under chat, you'll see that there's a live link, okay? You don't have to copy and paste this link you see right there below. Now, we're at the end of the presentation. It wasn't a very long one, but a very informative one. If you have any questions, now is the time to ask, and I will answer them to the best of my ability. All you have to do is go to either the chat box or the question and answer box, and I'll answer them. Someone's saying, you didn't show any other markets. Yeah, remember, you're correct. The reason why I didn't show a lot of the markets is because this technique takes a specific type of environment. In other words, you need a really strong downward moving slope in order for it to take place. Now, I saw a real large amount of that happening with stocks recently, so that's why I focus mainly on stocks. But trust me when I say you can see this happening in currency pairs, you can see it happening in crypto, you can see it happening in futures. It all depends what time frame or what market you want to be trading. But as long as you have a steep downward slope and prices below the 20, you will see the dynamic stop levels being generated, and that's where you can use them to get in. And then you follow the same procedure. You just get in when price is touched, and then you place your stop below the lowest low. It's that simple. Okay, it's really simple and very basic. Someone's asking, what are the advanced techniques with the pet D? Well, I can't give out that information. All I can say is that they're a little bit more advanced. It doesn't mean that they're complicated. They're just more advanced because you need this extra indicator. And they're really great too. I just don't want to talk about them right now because I want to make it as simple as possible. Now, if you want to, once again, include the pet D and you can have these advanced methods as well, they're really great. They work tremendously and they're very consistent as well. Contact ProTrader Strategies, and they can also give you a quote about a discount with the pet D as well, okay, and as well, and also some type of payment plan. Remember, ProTrader Strategies is in charge of all the discounts and all the pricing, so they're flexible. They're very willing to work with you, and they would, in no way try to, make you feel obligated into purchasing something. They give you information, and it's up to you to decide. Our only requisite is that you decide quickly, because probably by this time next week, this deal will be over and we'll go back to the full price. So if you're at all interested, don't sit on this for too long, okay? Any more questions? Okay, good class. I hope you learned something. Remember, this is a very simple but powerful way to take advantage of breakouts. If you're a breakout trader and you're not seeing the type of results you like, this is the way to get your trading back on track, okay? Call ProTrader Strategies at 310-598-6677. Ask about establishing a payment plan, and you can be up and running with a full year of the platform as early as today. As we take one last look at our disclaimer, thank you so much for taking time out of your Wednesday. I really appreciate it. And most especially, I really appreciate it if you become a student of mine in the Dynamic Stop course. Thank you so much. Also, see you next time. Bye-bye.